So the question of, I think, the day is, how is crypto reshaping the world? You've heard that Miami is making a big bet on becoming the crypto capital of the world. And so our next conversation is gonna focus on answering just that. Please give a warm welcome to our next two guests for a fireside conversation. Michael Novogratz, who's the founder and CEO of Galaxy Digital, will be joined on stage by Kate Rooney, CNBC's technology reporter, to answer this question. Is crypto really reshaping the world? How? In what ways? And how is it going to change the way that we interact with each other, and specifically the financial sector? Kate, Mike, the stage is yours.
I don't know. I've been sitting on this side. I feel like I've gotten used to this chair. So this is
definitely one ear, but
all right, Mike, it's great to see you. Thanks for being here. It's hard to see the audience. We were saying before, the lights are very bright, but we think they're there. So anyway, well, this will be great. We've got a lot to talk about, but I think the panel, it's about transforming the financial sector, which we can talk about that. We can talk about a million different things. But
I'm all yours.
Yeah, we'll cover everything. I'll watch the shot clock this time too, because last time I went way over. But you started your career on Wall Street. Maybe you can give people a little bit of background in how you got into crypto and how you got to Galaxy.
Sure. So I started in 1989. For you historians, that was really the beginning of the era of globalization. You know, it's funny, I was with my son and his friends, he's 24, a few weeks ago, and I was like, when I was 24, things looked so rosy, right? Capitalism had just won out over communism. Technology was flattening the world. We had this amazing 20-year run where trade between countries hit an all-time high. And if you think about it, we had this trust bubble, right? It was literally the best 20 years on the history of the planet. In lots of ways, you could measure it. More people lifted out of poverty in 20 years than any other 20 years, less people at war, global GDP was booming. And then Lehman Brothers happened, and the great financial crisis, and we all were like, oh shit, right? I ran a big hedge fund, Lehman was a counterparty, and it was gripped with fear. And for 2 months, the world blew up, and trust completely broke down. And then governments of the world got together and saved the world. We all breathed a sigh of relief, and went on with our financial business on Wall Street. There were a ton of people, though, that didn't fare so well, right? Millions lost their jobs, millions lost their homes, and for them, they said, this isn't fair, right? It's just not fair. Satoshi, the Bitcoin white paper, came out right after that and said, it's not fair, it's not sustainable, it's not transparent, and we don't trust the people making the decisions anymore. And so the entire crypto revolution, the entire decentralized revolution, came out of this breakdown of trust. And if you think about it, since then, since 2009, when this little science experiment was floated on the internet, trust has gone one direction in the world, right? Trust between countries. We're at war right now in Europe. China and the US was coming together like this, and now they're splitting apart, right? We have a Cold War with China. Like, that was unfathomable in 2006, 7, 8. Trust between generations, trust of our politicians, go on social media, like trust in our elections. One side of the country thinks those guys cheated, the other guys think, no, those guys cheated. And so as trust is in a bear market, what's been fascinating is blockchain, crypto, Bitcoin is in a bull market, right? Because it was set up to not need trust. It's set up for communities to buy in and have algorithmic or automatic or mathematical trust. And so it's a pretty interesting switch.
Is that what brought you into Bitcoin in the first place?
No, I wish I was that intellectual. What brought me into Bitcoin is a buddy called me up, and it was 2012, and the world was really worried about inflation, right? We had QE1 and QE2, and you had the European financial crisis right on the heels of the first financial crisis.
Yeah.
And I thought, really cool technology. It's a currency. I'd been a currency trader. The Chinese were buying, and usually when the Chinese are buying it, They love to gamble, so it was a good kind of, and I thought there's enough libertarians in the world that this is going to go higher. I wasn't sure it would work, but I just knew the token would go higher, so I bought it really as a bet.
And in this environment, a lot of people have been surprised that Bitcoin's actually not performing better, and the idea that if it's a safe haven asset or it's a hedge in any way, why isn't...
Let's put things in context.
Yeah.
Bitcoin was a science experiment 13 years ago. No one even heard of it until about 10 years ago. When I first bought it, it was trading at $100. And now it's $1 trillion brand. $1 trillion. 150 million people around the world have decided to trust some of their hard-earned savings in Bitcoin, right? That's a miracle. It's the single best brand that's ever been created in 12 years in history. It's known in every village, in every country. And so if you keep things in context, it's had a spectacular ride. Why has it gone down this year instead of gone up? Because it went up for the same reasons that lots of things went up last year. There was this idea that the Fed and other central banks will print money forever, and that's why it was correlated to stocks and correlated to risk. And now Chairman Powell has said, oh God, I better start looking like a central banker again. And he's becoming more hawkish. And so we're going through this rangy transition period. In some ways, if you told me that interest rates would be 150 basis points lower or higher than they were 6 weeks ago, and Bitcoin would be at the same price or higher, I'd say no way. So it's actually done spectacularly well versus interest rates.
Right.
If you look at Bitcoin versus the yen, spectacular trade. Bitcoin versus the ruble, spectacular trade. Bitcoin versus the Turkish lira, spectacular trade. Where there's bad stewardship, Bitcoin's winning.
Do you have any expectations for Bitcoin to decouple? Is that something the average trader should expect in the next 2 years?
I think Bitcoin will decouple over time. But think about it right now. If we lived in a place with hyperinflation, and let's say a prayer that we never do, because that kind of destroys the fabric of society, what goes up? Any asset goes up. And so if the fear is hyperinflation, Bitcoin should be correlated with real estate prices, should be correlated with gold, should be correlated with equities, right? You want to be long equities in hyperinflation, not short them, because in dollar value, right, they're depreciating, so the price should go up. And so the fascination with decoupling is, I think, a little too strong. Mm-hmm. What is interesting to me is the adoption cycle, right? I'm seeing institutions, sovereign wealth funds, high net worth families. You know, it always was a retail thing, right? It was a little guy's thing, and now it's everybody starting to participate. And they're not rushing in, they do their homework, they're starting in, but I get to look back and see the army waiting to participate, and it's a long line of people that are on their way in.
What about that institutional adoption? Galaxy was a part of Goldman Sachs doing one of the first, or I think the first OTC trade. Other banks getting in? What are you seeing from the institutional side?
So I don't think the big banks will get in big yet, for a couple reasons. They're making so much money in their traditional business that crypto's not big enough for them yet.
Yeah.
So if you're JP Morgan or Goldman Sachs, or you're working on infrastructure, they also have the Fed regulating them on top of all the other regulators, and the Fed is still cautious about where you're going to custody this stuff.
Right.
And so banks like ours and others have a couple years, I think.
Yeah.
You are seeing them get more engaged around the edges, but I don't think they're going to come rushing in. And I would tell you that institutionalization is happening. It doesn't happen overnight. This is a kind of a long plotting, you know, when the Texas teachers decided they were going to take some of their pension fund money and put it into crypto, like they announced it before they actually did it, and they started making bets, and I'm guessing they will allocate a couple $2 billion over the next 18 months, right? It's not, I'm in today, I'm buying it all.
Got it.
And so once you get one pension fund in, then you get the next, and over the next 5 years, I would bet you 30%, 40% of the pension funds start participating. And by the next 10 years, they're all in.
And we've seen a lot of talent move from Wall Street to crypto. Is that something you're seeing more of? You were a good example of that early on. And it's that you're leaving a lot of money on the table if you're leaving a Wall Street game.
I'm going to get this graph. Right now, I'm going to make it a mental graph. But the most fascinating thing about this space was in 2018, if you looked at crypto in general, it fell 98%. That's a beatdown of just, you know, spectacular proportion. Like, it was hard to survive as an investor. That's the overall market cap of crypto, 97%. Bitcoin was down 85, Ethereum was down 93, but everything else combined like was just wiped out. If you graph that, and then you had another graph which was talented people coming into the space, it just kept going up and up and up. Young people, engineers, entrepreneurs, infrastructure builders, investors didn't flinch during a 95+% sell-off. And that's all I continue to see, right? This is a purpose-driven revolution, and it's fueled mostly by Gen Z and millennials who looked up and said, I don't trust the system. The system is not working for me, right? Period. And so you've got a group, a whole generation of people that say, we're gonna move online, right? Remember, crypto really is an online system, right? As the world moves more and more online, they are rebuilding the architecture of the world, the online world, in a way that they think is more transparent, egalitarian, fair, equal access. And it's not gonna happen overnight.
Yeah.
But I tell you, from where I sit, it is happening, and it is happening with an intensity that rarely you see.
What about the infrastructure of Wall Street? Is there any potential here for blockchain to be used? I know people are building decentralized exchanges. Anything that the banks should be worried about, and if they're cut out here?
So the banks are worried, and they're going to lobby against DeFi. So what is DeFi simply, right? It's taking the genius of a blockchain. A blockchain is a shared Microsoft Excel spreadsheet that instead of one person controlling, lots of people get to control. And putting it into the insurance business, the derivative business, the lending business. And so we already have a giant decentralized finance network. Every day, tens of billions of dollars trade, or at least billions of dollars trade amongst millions of people, peer-to-peer, over thousands of tokens in apps. Most of Wall Street's not participated in that. There's regulatory reasons, there's KYC, AML reasons. Those things are gonna be solved. And once they're solved, DeFi is gonna win because it's better. It settles atomically, which means it settles that day. So there's no settlement risk. It's transparent. You know exactly what Uniswap charges in commission and what their volumes are and where their volumes come from. And so everybody sees. Really powerful. So if you're a regulator, you want DeFi. They don't know it yet. Like, I whack them on the head. I'm like, dudes, like, all you got to get is a few coders and you can see exactly what people are doing. The most important piece, though, is it's composable, which means you build something really cool, and I'm like, oh, that's great. I'm going to build on top of it.
Yeah.
And so we see an innovation cycle that's really hard to keep up with. Think about your iPhone, right? Someone was smart enough on that phone to put a GPS on it. Once we had GPS on the iPhone, we got Uber and DoorDash and all the delivery apps. Like, Uber's not possible without the iPhone. And so the blockchain really is building this giant app store. It's a trust machine, right? And when it's built, and it's not ready for prime time yet, right? Ethereum and Solana and Terra Luna and all these chains, you know, the layer 2 chains on top of it, right? If it's Polygon or Starkware, all these things you hear about, they're building a giant trust machine, a supercomputer that will process, authenticate, and store data. That's kind of step one. It's happening. The cool shit happens on top of it, where pure capitalism happens, right? It's the free competition of ideas. Me and you could build a communist system on top of the blockchain. And if we can get enough people to want to participate in our community, it's its own sovereignty, right? And you see NFT communities exploding. And so we're seeing it already happen. We're seeing it in DeFi, we're seeing it in intellectual property, NFTs, we're starting to see it in payments. But when I want to slam my hand down, this is literally like the first pitch of the first inning, right? Or maybe it's the first out of the first inning. But we're just getting started, right? The technology 2 years ago was barely working, right? And so it's going to take a couple more years before you really see it impacting how we live our lives.
Which of those layer ones are you the most excited about? It seems like Solana and others are taking market share from Ethereum. Is there one that you're betting?
I think anybody who tells you they know is full of malarkey. It is unbelievably complicated, right? I have a big bet on a lot of them. Ethereum, I think, is going to scale up here in the merge, and it's going to be faster. It will never be fast enough to process all the transactions necessary. And think about it this way. If I sell you a digital flower because I'm trying to court you, I would probably give it to you. Does the whole world's computer need to know that transaction happened? Right? So every single transaction doesn't really need to be verified by every computer in the network.
Right.
And so you're going to have levels of transactions that are going to get batched and verified by layer 2 solutions or side chains. And so this architecture is being worked out now. I think as a prudent investor, yeah, you need to have some Ethereum, and you should have bets in other protocols where you have knowledge. The simple way I like to think about it is if I see a system where there are more people programming on it, there are more people using it, there are more businesses being built on it. If it's growing at an accelerating rate, I invest. If it's not, if it's just a bunch of hype, we go short.
So you watch things like developer activity?
I think developer activity is wildly important.
And can you short these? Are there mechanisms?
You can short them. I would not recommend most people short them. It can be a very expensive game if you're wrong.
Got it.
But you certainly can, like in stocks, there's a derivative market you can sell, you can borrow coins and sell. And so you will see the industry slowly develop, like long-short equities. We'll have long-short crypto funds.
Interesting. And the derivatives and options market in Bitcoin in particular has really grown in recent years. Is that something you're seeing as far as institutional demand and what Galaxy's doing?
So one of the reasons crypto was so volatile is that most of the big derivative markets, and they think of derivatives just like futures, all happened offshore, and they happened mostly in Asian-based exchanges where the exchange offered tremendous amounts of leverage. You could take your Bitcoin and leverage it 100 to 1. Now, it's an 80 vol instrument. The definition of insanity is leveraging an 80 vol instrument at all, let alone 3 times or 10 times or 50 times. But there was this kind of casino-like mentality, and if you've ever lived in Asia, the gambling is part of the culture, right? So I lived in Hong Kong for 7 years. It shocked me at just how much gambling was part of the culture.
Yeah.
And so a lot of early crypto adoption was being used in Korea as gambling in lots of ways. And that leverage coming from the derivatives exchanges, you're not going to see that in the US or in the Western world. Regulators rightfully are going to say, hey, we don't want to allow people using that much leverage. And so if you look at Binance US or FTX US versus their offshore accounts, you can't get it.
Yeah, they lowered the amount of leverage.
Completely, because no regulator is going to say, hey, give this person 50 times leverage.
And that was affecting Bitcoin prices significantly for a while.
It's why we had the kind of volatility we do. That volatility is going to come down over time, and it already has this year. It's going to come down as more institutions get in the market. As the options market gets deeper, we're a big player in the OTC options market. This year now there's on-chain options, and so people are selling and creating volatility. And so as the market matures, you're going to see it look more and more like traditional markets.
And you mentioned too, you were an FX trader. As Bitcoin becomes less volatile, is there less opportunity for upside?
Early on I realized you can get rich a couple ways, right? You can buy a small amount of something that moves a ton, or a lot of something that moves a small amount. And so as volatility comes down in Bitcoin, people will feel comfortable buying more and more of it and using leverage, right? I would not recommend leverage right now in your Bitcoin account. I know others will say, hey, leverage your house and borrow money and just buy more Bitcoin. I think you should all be a little more conservative. I think you should own Bitcoin as part of your savings, because I do think inflation is going to stay high, right? We're in a really tough position in our finances in America. We have debt to GDP of 130%. The only way out of that is to try to gracefully inflate your way out. If you're if you misstep and inflation gets away, then you have a real broken society. And so you've got to crush inflation, but you can't crush it so much that it goes down and you get a debt trap.
Right.
And so you really want to run 5% inflation, tell everybody it's 3%, and run that for 5 or 6 years. That's how you get your debt down. It's a really tricky game.
Yeah.
But because of that, you want to own hard assets.
Got it. Really interesting. And we talked a little bit about DeFi. Web3 seems to be sort of the buzzword of the year so far. Are there certain applications that you just don't think need to be built on blockchain? Do you think there's a little bit of a hype cycle going on when it comes to Web3?
Listen, I think Web3 is really going to boom the creator economy, right? You're going to give power away from businessmen towards creators, and you're seeing it. I think NFTs are the killer app of the blockchain right now, right? Because what NFTs are allowing is artists and creators and musicians to control and own more of their IP. And because we have smart contracts, right, Vitalik Buterin's great addition to this ecosystem, you can build a new business models. So a lot of us who trade NFTs see that every time the NFT trades, the original creator gets a royalty. It might be 5%, it might be 10%.
Yeah.
Like, that's revolutionary. I know so many young artists in the traditional world who did their best work in their 20s, sold all 10 paintings to a collector at $300 each, only to see them trade for hundreds of thousands of dollars later on, and was like, yeah, I got none of that.
Yeah, it totally changes the economics
Yeah.
in that relationship.
And so I don't think, listen, will NFT prices be higher or lower? I don't know. I think a lot of these prices got kind of wacky. Some will go up, some will go down. But I'm positive, I literally bet my children, that adoption of these platforms, of NFT platforms, of this ecosystem is only going one direction.
And you mentioned trading NFTs. Is it something that you're buying, and something like an art investment? Are you buying NFTs to hold for the long term, or are you actually trading these actively?
You know, foolishly, I don't own nearly as many NFTs as I should. I've been so busy on Galaxy and trying to build a company and tell our story. I have some NFTs. Some I will keep because they were given to me, and even though I'm like, oh man, that thing's worth a lot now, but it's a gift, I'll never sell it. Some I bought because I really love them, and some I'll buy and trade.
Got it. Any Bored Apes? You haven't changed your Twitter profile to it.
I don't have a Bored Ape, and you know, I went to one of their early parties, and they're like, dude, we want you as a Bored Ape, and I really love the story, and I didn't buy one, and so my employees own some.
Really interesting. Well, what about global adoption too? I mean, we've seen what happened and is happening in El Salvador. Do you expect more countries to adopt?
You know, it's interesting. So what El Salvador did was make Bitcoin legal tender. That kind of cuts against the ethos of the Bitcoin community. Like, what's a real commandment of crypto is permissionless. No one forced you to buy your Bitcoin, right? And so forcing people to accept Bitcoin or accept crypto is kind of an anti-crypto ethos. I mean, it sounds cool and it's good for adoption. I'm kind of torn on it, to be fair.
Yeah.
I think stores should want to accept crypto because people are going to want to spend it. Again, I don't think people are going to want to spend Bitcoin in the United States. We have a pretty stable dollar. I think they'll spend stablecoin money. But in places where the currency is not as stable, or when you're worried about being able to transfer wealth, I think it's much more important. I do think right now there's, I don't know, 172 currencies in the world or some crazy amount. We're not going to have a world that needs that many currencies. And so you're going to have fewer big currencies like the dollar, the renminbi, the euro. You're going to have more digital currencies. We will have a digital dollar. We will have a digital renminbi. And in lots of emerging economies, they will flip. They're already dollarized, but you'll see a lot higher usage in stable coins than you will in their local currencies.
What does a digital dollar or a central bank digital currency mean for the private stablecoin market? We've seen billions of dollars flow into
So listen,
that side.
there's a huge decision for the government to make. We got China over here that did a centralized digital renminbi. They know what toothpaste you're using to brush your teeth. They know you're pregnant before you know you're pregnant. They know if you're gay by what you shop. And so do we want them intruding in our life? I certainly don't. Like, I think the ethos of America is privacy and freedom. And so we really need to police this. I think they should be private stable coins. with deposits kept at Fed banks. You know, Brian Brook was the controller of the currency under Trump and Mnuchin. He laid out exactly what I think the stablecoin plan should be. Yeah. The Fed is now debating it. Our government has never been a great technology builder. I feared that they'd try to build their own stablecoin. We already have an infrastructure. And so I know I heard Peter Smith say the opposite. Yeah. I think he's wrong.
You don't think it'll be privatized?
I think you're going to have Fed-regulated stablecoins, but they're going to let the private industry run them.
Got it.
And I think it's really important that we all focus on where the privacy line is.
Right. What about these algorithmic stablecoins? The idea that you could back a stablecoin by more cryptocurrency?
So you know, I have a tattoo on my arm for Luna, which has become the biggest algorithmic stablecoin now.
You got a tattoo?
I have a Luna tattoo. Yep. You know, I invested in this young Korean kid, Do Kwon.
Yeah.
He was brilliant, and he built up this ecosystem. He's now selling his Luna to buy Bitcoin to back his stablecoin. Is it riskier than USDC? It's a lot riskier, but you get paid 18% to own it. And so as long as there's disclosure, I was with a congressman recently who got it. He was like, we just need to make sure there's disclosure. I would not want someone buying it, not depositing it at 18% and just holding it and thinking, hey, it's the same thing as $1, because it's not. You wouldn't be getting 18% if there was no risk.
Right.
And so a lot of participating in this is having good advisors, doing your own homework, or knowing what you're doing. And you know, that's what we're trying to do at Galaxy, is be an arbiter of what we think is the truth and what we think is good knowledge. You're probably going to have regulators say, yeah, that's not enough. We need to, you know, put disclosures around.
That was my next question. I feel like regulators' heads will explode when they hear some of the mechanisms, whether it's the lending side of things, when Bitcoin is really the biggest issue they think about, the idea that you could earn 20% on a cryptocurrency that's backed by Bitcoin. How are you explaining that to regulators?
So what's so interesting is at all the regulatory agencies, and now in Congress, they have young people that work at their offices who completely get it, right? There are 4 or 5 young Democratic congressmen that completely get it. The older generation doesn't. And so you're seeing this shifting. What's positive is it's really not good politics to be anti-crypto right now. There are 50 million Americans that own crypto, and a lot of them are single-issue voters. And so you've seen the whole Democratic Party shift pace, right? They wouldn't take our calls, and now they're calling us because they're trying to come up this, like, no one wants to be anti-innovation. Like, raise your hand, hey, I'm gonna be anti-innovation congressman or senator. That's a stupid start, right? And no one wants to be anti the little guy. When I say that we had $8 billion last year in overdraft checking payments that went to the big banks, $8 billion. Rich people didn't pay them, right? Every ATM now costs $4. That's the average ATM fee. And so if you take $30 out of an ATM, that's a pretty big tax, right? Rich people don't take $30 out, they take $500 out.
Right.
And so it's a very regressive system, our banking system. And so I think you're going to see the politics really shift to certainly more bipartisan.
It's interesting. We have noticed that shift lately. We will wrap up soon, but since we're here in Miami, I've been asking people sort of their thoughts on this as the capital of capital, as the mayor calls it. New York City and the Bay Area.
Listen, I love Mayor Suarez, but I'm a New Yorker through and through. We are going to open an office in Miami at one point soon. We have employees that are going to want to live here. There's great energy in this city. He's doing a lot of smart things. There's a mayor's conference going on simultaneously. And I think it's important, right? 95% of American GDP lives in cities. And those mayors have a lot of influence on what goes on in DC. And, you know, our company alone has created a whole lot of high-paying jobs. And so if you're any mayor, you're going to want crypto companies in your city.
New York is still the capital, though?
But I think it's hard to take New York down.
Yeah, got it. Well, Mike, thank you so much. This is great, and thank you all for being here.
Thanks, guys.